Knock, knock. Are we live? Hello? Is this thing on? Yes, it is. What up, everyone? Hey, it's the morning show crew, not here in the morning, here in the afternoon, 2 p.m. Eastern time on an FOMC day. So we just had to hop on and do a little live react.
How dare us, JC? We've had our YouTube channel for over a year now. I think this is our first midday live video.
I think we did one that you weren't invited to. It was a holiday. I don't know.
It's true, we did. Anyway, enough about that. Breaking news. Dun, 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 dun. The Fed left rates unchanged.
Stop. No way.
I know. Shocking.
Got it. So let me get this straight. As somebody who doesn't know anything, everything was priced in. Nothing new.
No. So it's really his commentary at this meeting, right? Like, we're going to have to wait. We'll read off some talking points from the press release and then we'll get into it. But it's really going to be the Q&A.
Can we do a state of the markets, please?
I also want to show the statement with highlights of what's different and what's different from last time.
And also, going to do that? Are we really doing that?
Yes.
Why?
Hold on. Can we do a state of the markets first, please? Let's talk about what's important. First of all,
stop.
Hold on. Let's talk about what's happening. The NASDAQ 100 futures are up 500 points.
Okay. Yes.
The NASDAQ 100 futures are up 500 points. That's 2.5% for the NASDAQ 100 futures, by the way.
Okay.
The Dow futures are up 260 points. You got S&P futures up 1.5%, 80 points to the upside, right? So stocks up across the board. 30-year bond futures up, muted, but 0.5% almost on 30-year bond futures. That's nothing for bonds, but the market likes a relatively muted bond market. That's what you're getting. Crude oil up 4% today, guys, pushing 78 for oil. Copper 2.5%, pushing 420. Gold up 0.75%, 24.70. Silver up almost a full percent, just under 29. So I just want to just remind everybody what it is that we're doing here. It's not so much what the Fed said or didn't say or what they're going to say. It's really how the market is reacting. Bitcoin, up a few hundred points. Less than 1%. Ethereum up less than 1%. Solana up 1%. Binance. Not a lot of action in cryptocurrencies. It's mostly equities and commodities that are doing well.
But you said it, JC, right? The important point about a day like today or an event like the latest FOMC decision, it's not about the decision. It's not about the announcement. It's not about, we didn't move interest rates. It's about what the market thought of the announcement, right? So we're looking at price. How are things reacting when this news hits the wire? A lot of times you'll get a knee jerk in one direction, right? That's quickly corrected by the close today, or sometimes you get a big reversal day tomorrow in a situation like this, right?
A lot of times that's when there's like 50 bips priced in and they might do 75 or they're 75 and they only do 50. In this case, there was no real binary sort of situation, market already pricing things in, right? As somebody who's not like a Fed watcher and one of these obsessed people with the Federal Reserve and monetary policy, even I'm dumb enough to know that there's nothing here, right? And the market is acting accordingly. So correct me if I'm wrong, and then you guys could tell me all the things that I don't know about the Fed. Correct me if I'm wrong. But unless this Powell guy says something that spooks the market in a little bit, this is just another day.
Yeah, listen, yes. So 90% chance just ahead of the announcement that we were going to stay where we are in terms of the policy rate. If you want to throw up the table, Fonz, throw it up. But again, the read today is going to be in the commentary. So all of the reporters are going to be asking Powell what he thinks the likelihood or the odds of a cut at the next meeting are, because the market, if you look at this today, right, look at the July 31st meeting. So 98% chance.
Can you explain what this is, what this funny green line is, and like all this stuff going on? What's happening here?
This is one of the best matrices we've ever made.
Excuse me. All right.
It's fantastic. It's really good. So it's simply showing you, and we're greening it out to let you know where the market thinks the policy rate will be after every Fed meeting, right? So July, September, November, going on down the line. If you look at the green box, it's showing you where the market today, based on Fed Fund futures, believes interest rates will be after X Fed meeting, right? So today, you see 98% chance. The market sniffed this out early. It's been pinged towards 90, 95% for weeks, months now, that we were not going to cut at this meeting. However, if you look at the September meeting in the second row of this table, market's pricing in a 90% chance of a cut at the very next Fed meeting.
This is coming into today. So would be curious to see if that's changed at all, right?
No, we ran this like just now. This is today, 10 minutes ago. Yeah. So 90% chance, you always want to look on the FOMC day. You always want to say, what does the market think before the meeting? And then you take Powell's comments in the Q&A today and figure out what does the market think now, right? This 90%, if it goes to 60%, market's going to sell off, right? So I guess what I'm saying is, I don't know if we're off sides, but a 90% chance of a hike at the next meeting, I don't think that's a done deal. The market's treating this like it's a done deal. So I think the risk going into the commentary in 25 minutes here, 24 minutes, is that Powell doesn't give them the indication that they want, that the first cut will happen at the next meeting.
Okay, Steve. Well, based on the statement that comes out at 2 o'clock, the press release, I think he might use language that the market is looking for, because the changes they made seem to indicate that they acknowledge that the economy is cooling, right?
Yep.
Do we want to bring up? Let's bring up slide 1 here if we can. This is the statement that they just released, redlined against the statement from June. And pay attention to the first 2 paragraphs, right? Job gains went from remain strong to moderated, right? Unemployment rate has moved up, but remains low, right?
Wow.
All right. Let's see. They changed modest progress to some further progress.
They're sowing the seeds here.
They are sowing the seeds here.
Wow. This is great. Yeah.
Sowing the seeds.
Good stuff, Spencer.
What does that even mean? Sowing the seeds? What is that?
So
I don't know.
What is Jerome Powell's job? He's got a lot of jobs, right? But one of his jobs that goes unmentioned is he has to do these things in a way that doesn't shock the market, right? So they don't come out and tell you at the last meeting, oh, there's no shot that we're cutting, and then come at the next meeting and cut. No, they want to give you a runway. They want to we're stupid. We're humans, right? So they try to give the market every single sign along the way that this is where we're going before they actually go and do it, right? They don't want any surprises, and that's what's going on here. They're gearing us up for a cut at the next meeting, and I would imagine the market's going to really like that.
Yeah. And you know what? Who LFGY in the chat? Nothing Burger. Go back to watching the Olympics. The initial reaction.
Thank you. LFGY. Somebody's paying attention, right? Big Nothing Burger here. Big to do. Big to do. Here's the big to do. We were in a meeting earlier today. Analyst team, traders, everyone getting together. Great ideas come out of there. We actually got a couple of good ideas. But one of the common themes that I agreed with Strazza on, it's less about the Federal Reserve doing its thing right now and more about some of these moves in technology and in growth that have been selling off, sticking those landings to be able to sell some puts against those levels, to be able to buy the common stock if you want to do that, take some of that money from those put sales, buy some out of the money calls. Like, there's a lot of implications here. And I like what Strazza said. It's not so much because they're like, I'm going to wait. Strazza's like, I'm going to wait. I want to see the close. I want to see the close. I'm like, yeah, because of the Fed? And he's like, no, because of the reversals in technology. So why don't you tell me, Strazza, how are those looking? You were a little spooked out with AMD earlier.
Yeah, absolutely. I was just saying on the Hot Corner video too, I don't like the behavior of AMD right now. Something like Micron, I like the intraday activity today, and something like Micron. AMD, it popped. It was up like 10% at the open, and they've been selling it all day. The rips in these stocks, the mega cap growth stocks, the AI stocks, they're just selling rips nonstop for the past 3 weeks now. I want to see that change before I step in and sell puts.
And let me ask you this, Mr. I'm scared. I don't like the AMD. How about the $300 billion added to the market cap of Nvidia today? Are you entertained there?
Fantastic. And that's
$300 billion for those keeping score at home. Probably a little bit more than that if you want to do the math, but holy shit. $300 billion in market cap added today. Plus, right?
It's not small. It's not a small
Dude,
amount.
$300 billion in one day, half a day.
How
Damn.
cool is it? How cool is it that this stock can rally from another stock or another company coming out and saying that they're spending money? I've never seen this in my career. Microsoft comes out and says, we're going to spend a lot of money on this, and they just hit NVIDIA because that's the only game in town. If Microsoft's building out their AI infrastructure, they're paying NVIDIA. So I think that's just so cool. What these guys have done is truly incredible. It's really good.
I'm bringing on Ian Cully here. We're talking about interest rates. Might as well bring on our FIC guy. Mr. Cully, what's going on?
Hey, what's happening, guys?
Oh, look at this. Now it's a party. Now it's a party. All right, so here we go. We're talking about, we say this all the time. Stock market likes a muted bond market, right? I mean, you want to talk about a nothing burger. Look at that bond market, man. Is there a more perfect situation for the stock market than what the bond market is currently doing, Ian?
Maybe a slowly grind higher for bonds. Maybe,
So
but again, a nothing burger, right? The reaction so far across the bond market and the futures market is pretty muted.
But Ian, don't you think it's because the reaction, the market hasn't reacted yet? The market's going to react in 20 to, I don't know, 90 minutes.
Yeah, once Powell speaks.
Yeah. We knew coming in. So Ian runs our fixed income posts. So he's the one who's looking at the Fed Fund futures matrix that we just talked about more than anybody on our team. It's pinged at 98%. The market didn't find out anything new right now. They want to hear what Powell comes on and says, how he's, what his face looks like, whether or not he's sweating when he says, yeah, the odds of a cut at the next meeting are probably pretty good. That's what it's all about.
Ian, 4% move on crude oil.
Yeah, it's impressive. A lot of big moves that began last night and carried through, through today's session up to this point. The Nasdaq rip. That's a heck of a candle. That's a serious bullish engulfing candle if it can stick today.
How about those industrials and transports, guys? Come on, man. Look at that transportation index. Look at the S&P industrials. That continues to be front and center.
Look at the small cap Russell 2000, right? Because we were pounding the table a couple weeks ago about the breadth thrust and the momentum thrust. And this is bull market initiation kind of price behavior. And then what happened? Everybody said, oh, IWM, it can't go higher from here. No, it probably needed to cool off, right? July 16th, it peaked out. It's been coiling so tight for the last 2 weeks now in a classic flag pattern coming out of a base breakout. Look, Russell 2000 has arrived. Small caps are here. It's go time. Banks, biotechs, buildings, the 3Bs, it's the interest rate trade, right? The Russell has a lot of exposure to the interest rate theme through biotechs, banks, among other things. These are the groups right now. This is the playbook. I'm telling you, JC, we went back Q4 of last year. I was talking about this on the analyst meeting today. And that was the interest rate sensitive rally from October 27th to December 27th of last year. The 10-year yield was, all rates were just crumbling at a solid rate, right? They were really coming in, and all of the interest rate sensitive stuff was coming alive. And then we came into this year, and that trade died for 2 quarters and went straight sideways. Nothing. Everybody forgot about it. That's the same playbook, right? It's the real estate. It's the home builders. It's the biotechs. It's the speculative growth. Asset managers, private equity, regional banks. Anybody who the narrative has been, oh, these companies are dead. They can't get by with interest rates this high. Breathing fresh life into all those industry groups right now. And that's the breadth expansion that we're really seeing.
$300 billion in market cap increase today for NVIDIA. Sorry to keep coming back to that, but like, wow. 300 billion. Here we are talking about the rotation into small caps.
Yeah. And I love the
$300 billion.
It's a lot. It's a big number. I love the comment.
Okay, so let's take the other side.
Please.
For the unwind, for the reversals, these rates need to start spiking. Bonds roll over, yen rolls over. Those trends continue. those breakouts that you're seeing across those groups that Strazza said, those are failing, right? So it's all about yen and bonds. So we're watching yen and bonds. Yen and bonds, stick it. These stocks are doing well. Everything Strazza said. We're maximizing our opportunities here. We are we're using as much leverage as we can to make as much money as we can, right? We're looking for those opportunities. So Spencer, you want to tell the folks what we're doing tomorrow specifically for this?
Yeah, just do a QR code on the screen, and I'll drop the link in the chat. And that QR code will bring you straight to a page that has the video ready to go tomorrow at 1:00. Steve and JC are going to be doing a remix of the video they did last week. We've gotten a lot of questions since Thursday about the volatility compression aspect of the strategy. So we're going to just talk a lot more about that tomorrow. It'll be at 1:00. Again, the link is in the chat. The link is on the screen. QR code, be there. That's
Strazza, you like that? A remix? I like that, Spencer. Nice.
That's what I called it. That's what I titled the stream, but then I realized nobody will actually see what I title it behind the scenes. But it made me laugh.
It is a remix because it's focusing more on the volatility compression, because that's the whole point, right? And Strazza said it best. Think about it like a can. You shake the can. We're looking for those cans that kind of fell that you don't want to open. You want to put it back in the fridge. Hopefully somebody else opens it and explodes in their face. Those are the cans we're looking for, right?
Hell yeah.
That's a nice way of putting it.
A lot of time, the catalyst to pop those cans open is Mr. Jerome Powell here today. So I think a lot of these coils are about to burst.
Hey, now seriously, we've seen these sorts of things as catalysts before. We saw it in October, right? Is my understanding, is what you guys tell me, that rally was because of something the Fed did. Aren't you guys?
Yes.
Go look at the 10-year from October to December, and then look at the groups that worked.
I believe you.
Spencer, did you invent the remix, or was that another guy?
What?
Did you invented the remix?
Wants to know if we give you credit for calling tomorrow's.
No, I came up with that. I came up with that. That was all my own noggin right there, but nobody will actually see that it's called that, so it doesn't matter.
So good. So listen, last week we had a great event. It was awesome. The truth is, we've never gotten this much great feedback ever with anything we've ever done. But with all that feedback comes a lot of questions, and I think the volatility compression stuff, I think, is really helpful. Like, why is that important? Why are we looking for that? And by the way, I think anybody who shows up tomorrow, you're giving them the scan for free. They get to see it.
Yes,
that's good.
Yes, everybody that shows up tomorrow will get it. So. There's that.
Tomorrow, 1:00. Scan. Tomorrow, 1:00.
I just thought of a better name for this stream we're doing now, which is FOMC. I told you so. It was a nothing burger.
Like,
right?
Spencer's on a roll. Look at this guy right now.
The people who are going to click on that are the ones who are like looking for the C-SPAN live video.
All right, so hold on. Let's bring it back. So the idea behind everything that we did last week with the breakout multiplier and the remix tomorrow, we're going to focus more on the volatility compression part of the strategy. The only reason we're doing any of this stuff is that so when we have an opportunity like this, we can make the most amount of money possible, right? This is a trade we're putting on now. We want it to work now. Hence the volatility compression aspect of it, which we're going to discuss tomorrow. Yep. So there are specific groups of stocks that I think we really want to focus on.
Yeah, I think
we talked about the industrials first. We have to, all the way down the cap scale, by the way. And I know it gets confusing in the nomenclature of the indexes, but guys, understand something. If you're out there listening, every single stock in the Dow Jones Transportation Average is inside of the S&P Industrials Index, right? They're all in there. These are railroads, truckers, shipping stocks, logistics. Yeah, these are very complementary types of companies to a lot of the other stuff that's going on in America that has been underperforming that other stuff until more recently. You're seeing it in the industrials. You're seeing it today. You're also seeing it in financials across the board. These Asian financials, the Korean one we talked about today, the Japanese banks, all of these things have been ripping, along with anything that's United States banking related. Large caps, small caps are making new 52-week highs. You're seeing it in the insurance names. You're seeing it in the capital markets names. Have been seeing that for quite some time. There's a lot of opportunity there. So I think, and it's small caps, right? Biotechs. What are you saying? The 3 Bs, the 4 Bs? How many Bs do we have?
Banks, biotechs, and buildings. I'm talking about properties. I'm talking about real estate. And that could include builders, right? They play a role in that. But JC, you're absolutely right. A lot of times these FOMC announcements are the catalyst to break out, the patterns that we're watching. So what we're doing is we're going back and we're saying, what are the groups that move the most, that give us the most juice when Powell comes out or the inflation data comes out and gives the market what it wants to hear, right? So we go back, we do the work. We said, these are the ones that are going to rip the most, right? When Powell gives us that indication that things are getting better in terms of interest rates. And then we want to lean into those for events like this and just get in early, position ourselves accordingly, and basically make the bet that the reaction this time around will be similar to the reaction back in October of last year, right? And the interest rate sensitive groups might like it, and they're going to be up, big, and then we're going to be in calls to juice our returns in those positions.
And Steve, the moment that you're talking about, that could be in 20 minutes.
I think, and then here's the other thing, Spencer, right? We say this all the time. This is so important. If you guys watch our channel, we talk about the news, we talk about trends, we talk about the price action around the news. Reactions to news, earnings, FOMC announcements tend to occur in the direction of the underlying trend, right? That is the best evidence or the best data that we have coming into a day like today. What's the underlying trend, right? Because surprises tend to occur.
Why don't we go over some of those underlying trends? What are the underlying trends?
Up.
Bonds up.
Yep.
Russell 2000 now up. Mm-hmm. Home builders up. Have you seen the base in real estate? Throw up the XLRE chart.
What about breadth? Has breadth been improving or has it been deteriorating, my friends?
Improving.
Things are moving.
If breadth was deteriorating and we're seeing market weakness, do you know somebody who would be talking about that every day? Out of curiosity, do you know one of those people?
Would you be counting?
Do you know anybody who would be counting?
Look,
how few stocks are making new highs? Do you know anybody who would be talking about that?
So when we talk about breadth expanding, ultimately, a lot of times what we're saying is the worst stocks or the stocks that haven't been good are good now. That's what we mean when we say breadth expansion. This is the worst sector this cycle. These are the worst group of stocks. This is real estate. The primary trend, I don't know. Are we jumping it? I drew a trend line. Usually when I draw a diagonal line, I feel like I'm jumping things. The trend is turning for real estate stocks. The worst stocks this cycle are now in an uptrend. That's breadth expansion.
Yeah, price is trading above an upward sloping 200-day moving average. Is that right?
Look at that. Look, and this has been, Ian, this has been going on since the first half of 2022.
Mm-hmm. But
let's
take it one step further. You're not actually going to buy this real estate ETF. What are you going to do? You're going to go into that ETF. You're going to see what's in it, and you're going to find a stock that you like. Is that all right?
I bought Simon Property Group today.
Look at this guy. How old are you? How about this? How about small cap consumer discretionary making new multi-year highs? Is it bearish for the stock market when all of these Japanese, American, Korean banks are ripping to new all-time highs, new 52-week highs, and you have small cap discretionary making new multi-year highs? Are those bad signs for stocks?
So the groups that we're talking about, whether it be small cap consumer discretionary or large cap real estate, these are the stocks that we've been looking at for the past year or two and being like, why aren't you guys working? They're working now.
LFGY wants to know when he could buy the Dow 50,000 hat. You want to know the truth? We're not making them. We're making Dow 60,000 hats. How do you like that?
Yeah.
Dow 60,000. Where's Apple? 5 trillion. Nvidia 5-6 trillion. Microsoft 5 trillion. These are all $5 trillion companies. Easy.
All right. We definitely want to
Dow, right? Not yet.
We definitely want to hop off here before the press conference so that we can, well, not all of us, some of us can go watch that and watch the market, watch that.
I'm going to be watching I might watch it twice, actually.
I know you will.
Spencer wants to shut this thing down so he could go sell some puts.
No, listen, obviously you want to see him stick it. By the way, last candlestick of the month right here. They're coming through one by one. All the international candlesticks are already in. A lot of the commodity futures are already closing. Crypto doesn't close till tonight. Stock market closes in an hour or so. So new monthly candlesticks for everybody. All you out there who partake, cheers. And if you don't go through a list of monthly candlestick charts, then you know what, man? I don't know what you're thinking. You're leaving knowledge, wisdom, and money on the table.
You get
Go through your monthly candles. Eat your vegetables.
You know, it's not every day that you get candlesticks on Fed Day. This is a truly special week in market history.
Nerd alert.
Don't forget Meta earnings after the close.
They keep coming.
Amazon and Apple tomorrow.
I'm
Big
stoked
week.
about tomorrow. Tomorrow's 1:00 event that we're going to talk about because this is really important. And you know what? Shame on us. We should be doing a better job of talking about that volatility compression. We talk about it internally a lot, especially with Sean.
Yeah.
But we don't talk about it enough publicly. And it's really such a huge advantage because you're looking for that because we know, because here's the thing, guys. We know asset prices trend. We know that's why technical analysis works, because we're looking for trends, right? That's what happens with price. But with volatility is the opposite. Volatility mean reverts. So from low volatility, so volatility compression, you get volatility expansion. You get that explosion and vice versa. We've been talking about selling puts and things like that. The reason is because volatility has expanded. So we want to profit from that as volatility contracts. So this is a really important concept that I think doesn't get talked about enough. It's all part of technical analysis. We're analyzing the behavior of the market and market participants. That includes price, and that includes the derivatives of price, which is what volatility is. It's a price derivative. So,
yeah.
Facts, all facts.
Facts only.
All right. Let's wrap it up and get out of here. We'll be back tomorrow morning, same time, same place, 8:30, the morning show. We'll be joined by Andrew Thrasher on the show tomorrow.
Speaking of volatility compression, awesome.
Perfect. Who better?
Fantastic.
We're not smart enough to do that on purpose. That's just a coincidence, right?
You doubt me. Why do you doubt me?
Dude, you are the man. Nice,
All right.
Spencer.
Smash the like. We'll see you tomorrow.